Good afternoon, everyone. I'm Brenda with Jewish Family Service, and I'm very excited that you are all here today. We are so privileged to have Dallas Capital Bank with us. We have Harry White, she's a banking officer. We have V, who's a banking officer, and we have Tony Fennell, who is Director of Compliance. So thank you, ladies, for joining us today. We are very excited to have you here for this really important topic. And I will kick it over to you so you can share with us all of your expertise. Thank you so much.
All right. So hello, everybody. My name's Tony Fennell, and I am the Director of Compliance here at Dallas Capital Bank. I've been at the bank for a whopping 3 months now, but been in banking for 25 plus years and in a compliance capacity for about the last 18 years. I'm going to let the rest of the team introduce themselves, and then we'll jump right into the presentation.
Hi, everyone. My name is Violetta, but you can call me V. I've been at Dallas Capital Bank for 3 years, but been in banking for 11 years.
Hi, I'm Perry White. I've been at the bank now for about 1.5 years and have been in the banking industry probably about 5 years or so.
Great. All right, so we're going to kick it off and we're going to kind of rotate, taking turns speaking to you guys today. But first, we're going to start off with just some key terms as we think about your credit. So first, there's a credit inquiry. There's the hard inquiries. So these are credit inquiries that are associated with applications you make for credit. So this is after lenders have your approval, they'll pull your credit versus soft inquiries. So these are credit pulls that would be done if a lender was reviewing your credit file, or if there were pre-screening offers that you might get in the mail or via email sometimes. Those are based on the soft inquiries. Your FICO score, these are your credit scores. We're going to talk about those. Then a thin credit file or no credit file. So if a person doesn't have a credit history or not enough credit history, and a paid collection. So this is an account that goes into collection because it was past due on your credit and then was paid. So first, we're going to talk about what's the difference between a credit report and a credit score. So your credit report and your credit score are two different things. The credit report is a statement that has information about your credit activity, your current credit situation, such as your history and status of your credit accounts. And then your scores are calculated based on the information in your credit report. So your behavior in your credit report makes up your credit scores. All right, understanding your credit score. So banks, credit card companies, any other businesses that use credit scores to estimate how likely you are to pay back money you borrow. A higher score, it makes it easier for you to qualify for credit and lower interest rates. And your credit score could range anywhere from 300 to 850, but different companies may have different ranges that they use as well. So something important to just remember here is when you're applying for credit, and banks or credit card companies are they're looking at that score, and they may offer you credit at a different rate based on your score. So let's say I have a 780 score, I might get a credit card for 7%, where somebody who maybe has a 680 score, it might be 10 or 15% because it's determined that you have a higher risk if the lower your score is to the institution. Right, next slide. You have many credit scores. So you can have more than one credit score because lenders use different scores for different products. There are many different credit scoring formulas, and information can come from different credit reporting sources. So for example, a credit card score could be different from a home loan score or any scores when you're purchase online, or like an automobile, depending on how they pull that, you can have different scores. But because lenders use different scores, you might qualify for lower rates with one lender and not another. So that could be important for you to shop around for items as well. Where do credit scores come from? So your credit scores are generally based on information in your credit reports. Then this information is reported by your lenders to credit reporting companies. And those companies are Equifax, the three biggest, Equifax, Experian, and TransUnion. So as you're making payments on your loans each month, your bank or credit card company reports that information to these various companies to help them determine your score. A long credit history helps with your score. Credit scores are based on experience over time. So your score improves the longer you have the credit. Open at least 2 different types of accounts. So for example, like a mortgage loan, a credit card, an auto loan, and that you're making payments on time. You want to be careful if you're closing accounts. And if you close some credit card accounts and put most of your balances on one card, it could hurt your credit score. Also, you want to keep your longer accounts open, even if they're at a 0, because that's part of your credit history, which helps your score. And it shows that you've had a long standing history of good credit. Only apply for credit you need. Credit provides a look at your recent credit. Credit providers look at your recent credit activity as an indicator of your need for credit. So if you're applying for a lot of credit over a short period of time, that could actually hurt your credit score because it's appearing that you need a lot of money over a short term.
All right, so your credit report matters as much as your actual score. So one of the things that you need to remember is periodically checking your credit report. So how you can do that online is go to annualcreditreport.com. There are other sites that if you Google it, they might charge you a fee, but annualcreditreport.com is free. So you can get your credit report through each 3 credit companies once every 12 months. Recently, Equifax offers the 6 free credit reports every 12 months. And they offer that until December 31st, 2026. And so when you visit the site, you may see steps to view more frequently updated reports online. So it gives you greater ability to monitor changes in your credit. So when you get into your credit report, make sure that there aren't any mistakes. So you want to be looking at your name. If you were married, divorced, make sure that your previous name is listed correctly on there as well. Any phone numbers, any addresses. Address is kind of important just because if you are a victim of identity theft, somebody using a different address might show up on that report. So that kind of gives you a little hint that there's something wrong. So there are several variables that affect your credit score. So you can kind of see a breakdown of the 5 factors that affect it. Of course, payment history is the biggest thing. You want to always make your payments on time. And if you maybe miss one, make sure to make it up. Your credit utilization. So how much of your credit are you using? Your credit age. So what Tony was talking about, if you have a credit card for 10 years versus a credit card for 2 years, your credit mix. So do you have all credit cards or do you have a credit card, an auto loan, a mortgage, a line of credit, so-and-so? And then credit inquiries. So when you have hard versus soft inquiries, a hard inquiry will always lower your credit score by a few points. So the more hard inquiries you have on your credit, the lower your credit score will go. So how long does negative information generally stay on your credit report? As you can see, we have late payments will stay there for 7 years. Chapter 13 bankruptcy will stay there for 7 years. Chapter 7 is 10 foreclosures, 7 lawsuits and judgments, 7 years or longer. So that's why it's important to just review your credit every year to make sure that nothing is incorrect, that hopefully maybe if you had a foreclosure back in 2008, that it should be off of your credit report or not being reported and calculated towards the credit score.
All right, so how can you go about raising your score? Well, the first thing you can do is you can pay your bills on time every time, and this has the greatest impact on your score. One way to make sure that your payments are on time is to set up automatic payments or to set up an electronic reminder for the payment to make sure you do pay on time. And if you've missed any payments, you want to make sure you can get current, and then you need to stay current on your payments. The second thing is don't get close to your credit limit. Your credit scoring models look at how close you are to being maxed out. So you want to try and keep your balances low in proportion to your overall credit limit. So experts advise keeping your use of credit at no more than 30% of the total credit limit. If your credit card has $1,000 limit, you should try not to exceed $300. The third thing is you should dispute inaccuracies in your credit file. Reports saying that you paid late when you actually paid on time, accounts that are closed that you are listed as open, and the same item showing up more than once, like an unpaid debt. If you find something wrong on your credit report, you may contact the credit bureau company and the credit reporting. You may contact both the credit reporting company like Experian, Equifax, and TransUnion, and the company that provided the information, for example, your credit card company. You want to explain what you think is wrong and why. You want to include the copies of the documents that support your dispute. Your credit reports come with instructions on how to dispute mistakes. You can contact the nationwide credit reporting companies online, by mail, or by phone. So we've provided the addresses and the phone numbers for the three bureaus for you to reach out to. All right, so how to rebuild your credit. Okay, so there's several things that you can do to rebuild your credit. So whenever you experience a financial challenge, your credit record could suffer, and rebuilding it does take time, and there are no shortcuts or secrets to rebuild to this. The steps below can help you with rebuilding your credit. The first thing, like we just said, is pay your bills on time every time. On time means the payment gets to the company by the day the bill is due. So if you pay by mail, you want to put your payment in the mail a few days before it is due. The next thing is you don't want to get too close to your credit limit. Credit scores consider how close you are to being maxed out on credit cards. If you use too much of your credit limit, it may hurt your credit score. The next thing is don't apply for too much credit in a short time. Your credit score may go down if you apply for or open a lot of new accounts in a short time. This includes getting a new card so you can transfer balances, or opening a new store credit card account so that you can get a discount. Next, if you don't qualify for a regular credit card, you can try a secured card. Many banks and credit unions offer secured credit cards. With most of these cards, your credit line starts out small. You put in an amount equal to your credit limit in an account as a deposit. And as you show you can pay on time, your credit limit may be raised and you may have your deposit refunded. And fees and interest rates can be high for secured cards, but using one can help you establish a credit record. Okay. Another thing you can do is if you pay with a credit card, pay your balance off every month. You can build credit by using your credit card and paying on time. Again, paying on time every time. If you can, pay off your balances in full each month to avoid paying interest. Paying off your balance each month helps you build better credit than carrying a balance, because it keeps you from getting too close to your credit limit. Keep it up. Credit scores are based on your overall experience with paying your bills over time. The longer you have credit and pay on time, the more information there is to show your good credit risk. And again, check your credit reports and fix errors right away. Your credit report shows your history of loans and borrowing. So there are 4 things that you can that you should not do to help rebuild your credit. The first thing is using a debit card or paying cash. These transactions don't help to prove that you can repay your debts in a timely fashion. The second thing is using a prepaid card. Again, a prepaid card is your own money loaded onto a card in advance. 3, taking out a payday loan. Even making on-time repayments might not help your credit. And 4th thing is taking an auto loan from a buy here, pay here car lot unless they promise in writing to report your on-time payments to the credit bureaus. Resources, the Consumer Financial Protection Bureau, consumerfinance.gov, or there's their phone number. And now we're ready to take any questions that you might have.
And I want to say one thing too, really quick about like secured loans, because you can get other than secured credit cards. So you can check with your bank or financial institution to see if they have like a savings secured loan or certificate of deposit secured loan, where you can just get that one lump sum pulled out. But when you are doing that, make sure your financial institution is reporting those to the credit bureaus, because sometimes they're not. So you just want to double check to make sure what's being reported and what's not if you do take out one of those loans. Okay. Any questions?
One of our attendees is asking if you can go back 2 slides for a moment.
This slide?
Nicole, did you want to ask a question? Okay, she's looking at the slide, I guess. So a question I have is, I work with a lot of clients that are just starting out with credit. You know, they've been, she doesn't have audio working well. So a lot of clients, you know, are just starting out with credit. How much credit is too much credit? What kinds of credit do you look at when you're looking for potential lending clients?
So for us, like if we're looking for a potential client, it's how long the credit's been open and how many inquiries. So it's going to vary for every person of how much credit is too much, because it's going to be on, you know, how much money do I make? How much debt do I have outstanding? That's what we're looking at, is your debt to income ratio. You know, what potential do you have out there with credit lines? So do I have $500 owing, but I have a potential to take out 20,000 on those credit cards still? We'll factor that into there based on that. But starting out, I mean, I would start small, you know, apply for maybe one department store card and one like major credit card like Visa, MasterCard, Discover, that have smaller limits, and then use those and pay those off just to establish your history and establish that good history. Because like I said, it's going to vary for everybody. Somebody could have 10 credit cards or 2 and still have good credit, you know, both ways. And it really based on your income for what you qualify for.
Okay.
But it's really all about paying on time, not opening too much at one time.
Gotcha. Okay, I'm going to read some in the chat here for you, some questions. Sylvia is asking, will making payment arrangements on a charge-off account help improve credit?
I think if they're reporting that you're paying on that charge off, you know, because that will report to your credit too. So to show you're making payments on that, that will help raise your score, because it'll show that you had this debt and now you're paying it, you know, it went to a charge off company. Those are reported, so it can show if you're paying or not. So it might take a little bit longer, but you know, just like with bankruptcy or anything, you want to establish this new pattern. So it's good to repay.
But make sure that it is being reported as being paid.
Paid, yes.
Okay. And a question that comes up a lot is when clients settle with either a collection company or a creditor, and it gets reported as settled, like is that a good thing or a bad thing for them to show on the credit report as settled and paid, or negotiated, settled and, you know, paid part or whole?
Yes, because when you're reviewing your credit report, it'll have just general information about detailed personal information at the top. But once you start scrolling down, then it'll start showing all the credit that you've ever had. And on there, it'll kind of show you a little graph of maybe missed payments. But yeah, next to it, if the line is closed or if it's open, it'll say active, on time, or even the specific loan and settled.
So if it says settled, closed and settled, is that a negative or a positive, would you say?
It's still gonna be a negative, right? Because if anything if you show past due anytime or settlement or a charge off or a foreclosure or bankruptcy, those are negative impacts on your credit. So it's the behavior that you do after those things that helps you raise your score
And the time
Gotcha.
frame.
and the time frame, right? So if it was and different collections and things might be looked at different too. So if you had like a medical collection on there, that's looked at differently than if you had a credit card collection on there. Because in medical situations, sometimes people can't pay, $50,000 at one time and are making arrangements. So it's all based on duration, right? So the longer the settlement's been on there and the more credit history you've built up since then, those are all good things.
Okay, gotcha. Okay, I'll go on to the next question. Joy is asking, since rent is not reported, what's the best way to report?
Since what's not reported, I didn't hear you, I'm sorry.
Rent?
Rent?
Mhm.
The best way to report is really, is to get a credit card, right? If you can, just a small one, even if it's like a department store card or a $1,000 Visa card or something that you use, at the gas station and you use it and pay it off every month.
So those kinds of companies like insurance, apartments, even employers will check your credit report just to show the type of risk that you are for the apartment complex. Like, are you going to be paying on time each time? But it doesn't necessarily mean that whatever you do will be reported to that credit reporting agency. To have reportable, let's say transactions, it's like she said, credit cards, auto loans, lines of credits, things like that.
Okay, I have heard clients say that they use something called Experian Boost, and they can actually add their utilities or rent. Is that something that lenders look at?
I don't think we are here. I haven't used that before, so
No.
I can't speak to that, but I don't know if they're using that or not, or how that, I haven't seen that show up on a credit report
Okay,
before.
okay. Next question, why does my FICO score go down after I pay my credit card balances?
I think it just depends on the person's individual report. There could be a lot of factors.
And I don't think any of us know, because that's what, the credit card companies have a magic, like formula of how they have a model that they use.
Mhm.
So it really could be different for everybody. If you pay it off and close, if you're closing it, you just want to pay off and don't close your lines. You want to leave those lines open. But it could be based on things that happen over the month. And it recalculates every month your credit score. So,
Yeah, they use algorithms or whatever they use.
They use modeling and algorithms, and it could be different for everybody.
Mhm. Okay, thank you. Someone says, I defaulted on a credit card during the pandemic and it will not be whole until 2027. Is there anything I can do to get it removed earlier?
I don't think you can remove it earlier, but a lot of lenders too, when you're applying for credit. So if you're not just doing it online and you're working with your bank, there's things that you can explain, like this happened during the pandemic because, we had during the pandemic, not just credit cards, extensions were being made on mortgage loans, people were being able to pay rent late. So if you explain the circumstances, and I think creditors are looking at things that happened during the pandemic differently. So you might get declined if you're online applying for a credit card, but that's the time where you want to go into your financial institution and have that face-to-face, conversation with the lender so you can explain those things.
Okay. Does all of this work the same for business credit, these rules?
So business credit isn't reported, right? It's it's not reported on a credit bureau report. If I guarantee the loan as an individual for the business, then that might be reported to my individual credit. But businesses, when you're doing business credit, there's other reports that aren't part of like Experian or Equifax that we look at information about the business on. So we would look for like if there were lawsuits, judgments, liens, things like that on the business, but it wouldn't be on Experian or Equifax or TransUnion. It would be like on LexisNexis, Reuters. There's companies out there that collect all the information on businesses.
Okay. Another question is about charge-off accounts. We talked about this a little bit already. Dealing with the collection agency, how can you fix these accounts?
Honestly, making the payments. At that point, when you're dealing with a collection agency, it's because that credit institution has transferred that debt to the collection agency. So you have to settle with them, make those payments on time, and make sure that that collection agency is reporting those payments to the credit bureaus.
Okay, and that will help a little bit if it shows that you're making payments.
Yes.
Okay. When you're working with the collection agency, the question is, should you ask for a letter in writing from them?
Yes, so if you've paid off the debts, make sure that you do get that letter in writing. Just because if for some reason there's a mistake on your credit report, you can always mail or email that letter to Experian, Equifax, or TransUnion. And they will take that as official. It's on official letterhead and everything. So that is proof for them.
Okay. How do you dispute utility collections on your report?
You have to follow the steps. So, and disputing any kind of issue on your credit report, you can do it through each credit agency. So you'll go into TransUnion, create your profile, and dispute whatever needs to be disputed. It's actually fairly easy to follow the steps. I've done it through identity theft. So yeah, it's just clicking buttons and submitting, and then you'll get an email saying that it was successful, or if they say they need more proof, let's say, then they'll have somebody follow up with you.
And I think it's important too, we talked about pulling that free credit report every year and getting it from all three companies, because your credit might not be reported to all three the same way. So one account might show up on one and not on another, because that is how credit card companies or financial institutions, it's about who they report to, and not everybody reports to all three. So even if you have that collection on your utility, is it on all three? If it's on all three, you need to dispute all three.
Yeah.
So that's really important.
And if you report it, if you file the dispute online for one, that doesn't go to all three? Or do you have to do all three separately?
You have to do all three. Mm-hmm.
That comes up a lot. Okay.
Yeah.
Another question, is there a company that reports your rental payment history?
Not that I know of. And I think it would, if that ever happens, I think wherever you're renting from would have to be the one that have to report.
Yeah.
I have had clients ask, and their rental companies say they won't do it. Somebody commented that AmRent tracks rental credit. I've not ever heard of AmRent, but that's a good bit of information. Thank you, Nicole.
And most apartments or, landlords aren't going to report because there's rules around reporting. So they don't want to have to follow those credit reporting rules. So it's unfortunate that, you're paying your rent on time and that's not going to count in your credit history anywhere. Right. But I just think it's because of the rules and regulations that we all have to follow when we're reporting, that would be probably too much of a burden on them.
Okay. And Nicole or somebody also said that Boost does not pick up rent. So I guess Boost, I've heard that Experian Boost will pick up utilities, but apparently someone is saying that doesn't pick up rent. So that's interesting. So maybe that AmRent information is helpful. See when you're making payments on portal messages. Okay. Three-part question. Should you consolidate? Does it help or harm your credit? Is it just like transferring debt to one card? So I think we're talking about, when consolidating to a card. She says, I've been told disputing harms your credit if it, second question. Let's go ahead back to the first questions. So consolidating credit. How does that come across on a credit report?
So it's like a multi-part question. When you're consolidating credit, it's because you have a lot of debt. And then it also depends on the type of credit that you're using to consolidate. So if you're doing a line of credit, where you have monthly payments, it's just going to show as a line of credit. Some people do mortgages with cash out to be able to pay off, to consolidate and pay off that debt. So it just depends on how much debt you have versus consolidating it, and versus what you're using to consolidate.
Mm-hmm.
Right. So you have to look at it too. Like if I have 10 credit cards, right, and I'm going to open an 11th credit card to consolidate my 10 because it's a better interest rate, or if you're not doing that all the time, it might not hurt you that much because you're adding a new line, right? And then you're moving it over. So obviously if I can get some deal for 0% for 3 years and I'm paying 18%, well, it's better economically for me to consolidate onto the 0% for 3 years. But if you're doing a bunch of 0%, 10 in 6 months or 10, applying, that's where that's going to harm your credit score. So, you want to kind of look at that. But then again, if I'm consolidating, like V said, on a credit card versus I'm doing my mortgage, those things report differently. So a lot of people, if they do have a mortgage, will take that cash out to get a lower interest rate and have some write-offs maybe on their taxes. But
yeah, it goes back to the algorithm, honestly.
Depending on the type of credit and how much, so it's going to be different for everybody, how often you're doing it.
Yeah.
And how much credit you have outstanding or open lines that you have too, available credit versus outstanding credit too.
So in your example, that was a great example of the 10 open cards, moving the balances to the 11th card. In that case, those 10 cards would then go to a 0 balance, right? When they moved over. So would that help the credit score? Because now your debt ratios on 10 cards have gone, very low.
Yeah, and that could help your credit score some too. And again, you don't want to close those cards because you want to keep those lines open. But maybe you could also, call those credit card companies and lower your line too, right? So if I had 10 credit cards that had a $5,000 line on everything, and now I still have 50,000 right now open on those cards, and now I've moved 50,000 to another, then I would have like $100,000 available maybe in credit card. Maybe I would suggest lowering those lines a little bit, and leaving them in a 0 balance. Don't close them though.
Okay. Very good.
But again, it all depends on, I know we say it depends because it all depends on the person and their credit too, right? And it might change your score 1 or 2 points. Most things aren't going to change it drastically unless you're defaulting on what you owe.
Okay. Another question. I've been told disputing harms your credit if it isn't successful. Is that correct? Also, what is the timeline for a response to a dispute? Rumor has it they have 30 days to reply and confirm.
So when I was disputing items on my credit report for like identity theft, there was an address on there that I hadn't seen in a very long time. And there was no time limit or expiration date for me to be able to dispute it. It just depends on the credit bureau itself if they have any time frames or limits or anything like that. But no, it won't harm your credit. If you have, let's say, a mistake on your credit report where, like for example, identity theft, somebody opened a credit card fraudulently and you get that removed, that will potentially help your credit score.
Okay, excellent. Somebody wrote in, there is a current program that uses rent payments for verification for home ownership loans. Is that something you've heard of?
No, I have not heard of that.
Okay. So the consolidation conversation, instead of just consolidating to another credit card, the question is, what about when you can use a consolidation company, like those credit counselors, or that they take over your debts and they do consolidation loans for you? How does that look?
So credit counselors could impact your credit score because they're usually working to make arrangements with your credit card company to take a lesser payment. So there might be like a loss there. Those aren't really consolidation loans per se. They're just working with your creditor. So you want to look at those companies and it could have an impact on your score.
Okay. Is there such a thing as a consolidation company that they're referring to?
There's other, like there's banks you can get consolidation loans that aren't credit cards or mortgages. A lot of banks have like unsecured loans that you can consolidate. They're just not revolving. So they're just the term loan where you have your standard monthly payment. And those are good options, for, or, if you can qualify for those, you might want to do those. I would suggest doing those options before you go to a credit counseling company
Yeah,
to help you
I
with
would
that.
be very wary
Yeah.
of those because they will charge you a fee for all of that. And if you compare the fees, it might just be cheaper to go through a bank instead of a consolidation company.
Exactly. Thank you. Someone's asking, can you explain debt to income ratio on credit and increases?
Yeah, so your debt to income ratio, it takes how much you make. So and it usually looks at your gross income, so your income before taxes. And then you'll look at what are my monthly payments that I have, and you'll divide your income, your monthly payments by your income to get a percentage. So depending on the type of credit you're applying for and who you're applying with, they'll have different standards. So let's say, we're a bank, we have a credit policy. And for auto loans, we might say that if you have a debt to income ratio of 40%, maybe you get 6%. And if it's 45%, your interest rate might be 6.5%. And if it's over 45%, we might say we can't loan to you because the risk to loan to you is too high for us. Because we're seeing how much income you have left, right? So I don't know how else to explain it, but that's what it looks at, what your monthly payments are versus the income you make and what you have left.
And that's looked at pretty much in all lending. I mean,
Correct.
credit cards or loans or home purchases. That's definitely a factor.
Yeah, and the ratio could be different. It might for, like I said, for a mortgage, it might be higher or a little bit higher, and it depends on the lender too. Everybody's going to have a different policy of what kind of risk they want to take.
And, yeah, an unsecured is going to have a lower percent required than a secured,
Right.
like secured for a home or car.
Right. Yeah, because on a car or a home, the bank or financial institution has a little less risk because if you don't pay, there's collateral that they can go and get to collect their money. So
exactly. So question, I think this is about the credit bureau, not for you to just a different angle, not for disputing credit, but for them to reply to confirm the debt or a mistake. I'm not sure exactly what the question is. She doesn't have audio to ask. So when we were talking about disputing items on the credit report, she's saying about confirming the debt or a mistake. So if they get back to you on a dispute or when they confirm the debt is accurate, I'm not sure what the question is here because I think it was from a few minutes ago.
Yeah, I mean, they will get back to you on a dispute saying it's been resolved and corrected, or it's not because the bank or financial institution provided the
Right.
information to show why it was correct. So you would hear back either way, whether it's corrected or not.
Does the client, does the consumer get that information that the lender said it was accurate? Do they get that back in the details?
It would be referenced by the credit bureau. So what I ended up doing when through the identity theft is when I saw it, I contacted both the bank that issued that credit and the credit bureau. So to make sure for my peace of mind, I sent an email to the bank saying, this is not me. This is identity theft. And after that, they also communicated with the credit bureau. The bank will send letters to verify, confirm that it's either accurate or not accurate.
Okay, and then once you had identity theft, do you recommend putting a fraud alert on your credit profiles?
Absolutely.
So there's two different types of like freezes. So you can have a temporary freeze. I think it's 3 months, and then you have an extended freeze for a couple years, I believe. And then you can also sign up for check systems. So the bank uses check systems to make sure if you have any charge-offs or if you have a clean history with other banks. So you can also put an alert or a freeze through check systems. The US government does have a website for identity theft, and it'll go through all the steps that you need to follow to make sure that you get everything reported accurately, and you can also submit any kind of identity theft that you've had.
Okay, and then if you wanted to apply for credit, you'd have to remove that alert temporary, like a
Correct.
24-hour, is that what it is, like a 24-hour removal?
You can set it, you can set your time frame.
Mhm.
Like, I mean, I haven't had identity theft, but I just had mine frozen anyway, just, because companies get compromised sometimes. And so your information could just be out there. So just as a precaution, I have mine frozen. So I just have to remember before I go apply for something to take it off all three. And you need to do it again on all three, and not just one. And you can set, so like last month I did it, I set it for 30 days. So then that way it just reapplies my freeze 30 days after.
Oh, it
But you can
automatically
pick your
goes-
time. Yeah,
Okay.
you can pick your time frame for your freeze to be reapplied, how long you want it off.
Oh, okay, okay, and then when you want to remove it, is it all done online as well? Remove the freeze?
Yeah. Mhm. And it's pretty easy to do.
Yeah, it's very, very easy.
Mhm.
Okay, and I think we talked about secured cards a little. The question is, does secured cards, do they actually help build credit?
Yes.
Mhm.
If you're using them and paying on time. So it's the same with the secure. Just make sure, like I said, if it's a card, most cards are reporting, but if it's not a credit card, you just want to make sure the bank is reporting those lines, because some choose not to.
Mhm. Okay. Okay. If they can't confirm the dispute in time, will it be removed? And is it true that the collection process is illegal, meaning they cannot collect from debt not owed to them that they purchased?
I think that's more.
Yeah, that's more a legal thing, so we
Yeah.
wouldn't want to comment on that.
Yeah.
I'm not sure. Yeah.
But let's say the Bureau can't confirm a dispute resolution within 30 days. I think you said 30 days. Is that, does anything happen with that debt if they can't confirm or deny it after 30 days? You know?
I'm not sure. We'd have to look into that one. I mean, we could look into it and send it back to you. And if you have that person's information, get them back that answer. But
Either way, they probably have to respond, right? Isn't that like a CFP?
yeah, they do have to respond. Mhm.
Yeah, so they might respond saying they're still researching it, or, I mean.
Yeah,
they-
because some things might take longer to research.
Yeah, yeah. Okay, and.
I think that's why it's a good idea too. I think, Viva was saying, not just disputing through the reporting agency, right? Go to your whoever the credit card holder is or your financial institution and dispute it there too. So you have it working from both ends.
Yeah, yeah.
Your bank might be able to, if you go to them directly first, because everybody makes mistakes, right? So they could fix your credit report for you where you wouldn't have to go through the credit reporting agency.
Okay, they can self-report it from their angle too.
Yeah, yeah.
Okay.
So if you went to your bank and they made an error and they did the research, they can correct it and just send it directly to the credit reporting agency. So I think it's, it's definitely better to go at it from both sides.
Yeah, because keep in mind, the bank, if you have a credit with that bank, they're already reporting monthly your activity.
Mhm. Okay, I think that was the end of the questions on the chat. Yeah, we have a lot of good questions here, a lot of great answers here on everything. And yes, somebody's asking if they'll get a copy of the slides. If that's okay with Dallas Capital Bank, I can send out the PowerPoint. So,
Yes, that's fine.
okay. And any last tidbits you all would like to share with us? Any things that come up on a regular basis that could help?
Remember to pay on time,
Yeah.
and things happen and people fall behind. So as soon as you can pick it back up. I think that's the most important thing, right?
Yeah.
I think there was
And
a
then-
question I was going to ask you. If the clients realize they just lost their job or they can't make the payments this month, if they call the credit card company, call their bank, whomever, and they say, can I pay late? I'm going to pay late. Can you pause my payments? Does that ever work?
Yeah, that does. So some credit card companies maybe will let you skip a month, or if you work with your bank, they'll put in to skip a payment. And that's really important because then they'll change your due date. So it won't show your past due. So it's always good if something happens, because things happen. I mean, during the pandemic, that happened to many, many people.
Mhm.
So it's good to be proactive and make those arrangements before you go past due, because a lot of creditors want to work with you because they don't want you to be late. They don't want to charge you late fees. They want to, and the more proactive you are, the better it is.
Awesome. Yeah, I think that comes up a lot, and the communication is key with your creditor.
Right.
Definitely. And so do they need to get that in writing, or do they automatically just see the statement due date change when that happens?
Usually, I mean, I don't know what the credit card company is, but usually your bank will give you something that says you had an extension on that payment.
I know during the pandemic, a lot of companies even gave like 3-month deferments and
Right.
things like that. So yeah, I don't know so much if that's still possible. That's why I was asking if you thought that was still an option.
Yeah, I think it's always been a possibility, and maybe people didn't know that, like, hey, something came up or I had this emergency and I can't make my car payment this month. A lot of places will work with you to let you skip a payment.
Okay, good to know. That's great information. I'm just answering that. I'll send it out. Will anybody else have a last minute question? While you're thinking, I'm gonna go ahead and send the poll out if you'd all be good enough to answer it. And I'm gonna launch. It's one question. If you found this workshop effective, if you can say yes or no. Looks like you got a great rating, everyone. We got 100%. That the workshop was very effective. So we appreciate all of you coming today, and I will send that out. You all have my contact information as well. And if any of you would like to reach out to Perry, Tony, or V at Dallas Capital Bank, I'll be happy to share their information if you didn't catch it as well. So thank you so much, and have a great day, everyone.
Thank you.
Thank you.
Take care. Bye-bye.